Hello, everyone. Welcome back to my YouTube channel. Again, so appreciate it. Don't forget, for those of you who are new to the channel, don't forget to like, share, subscribe. Also, leave a comment, new subscriber, in the comment below. I want to go ahead and welcome you and say thank you for subscribing to my channel. I'm hoping I can give you as much value and to be able to help you with building your understanding and the knowledge of the mortgage industry, so that can help you with being able to, of course, to acquire your first property and to start being well on your way to being a homeowner. So again, today I want to talk to you guys about one of the 4Cs. If you've looked at the first two series of this 5-part series, you will know that we've talked about the 4Cs quite a bit. The 4Cs being collateral, cash, credit, and capacity, or capacity, cash, credit, and collateral. Again, we talked about the 4Cs, and we said how the 4Cs plays a huge factor as to how you are able to purchase your first home. The way the banks would look at your file, your deal, when you send your file over, when your realtor and yourself packages everything, sends it to the loan officer, and the loan officer sends it over to the underwriters, and the underwriters make the decision and says, yes, you're approved. These are the ways and these are the things they look at. So it's crucial for you to be able to see things from that perspective, because when you see things from that perspective, you now know how to package your loan properly, so you can be able to make and get yourself a decision that works in your favor. So again, to know is to give you a leg up. Now, there are just some things you can't change, right? So if you have a 500 credit score and you have no money in the bank and you haven't worked in 3 years, then this knowledge would not really help you. But what this knowledge can actually help you do is land a job that could now help you to build those things up to give you the leg up that you need to work with getting your first property. But if you're in a position where you have a few of these things that we've talked about in the 4Cs, or you have the 4Cs down, and if you have those 4Cs down, then it's good for you to know, okay, how can I package this so when I send this over to the bank knows that I'm a well-informed borrower and I'm ready to rock and roll. So again, we're going to talk about one of the four Cs today, which is the portion that deals with collateral, or I call it appraisal. So again, we're going to talk about the appraisal portion. I'm going to give you guys some insights as to the way appraisals are looked at, what portions and what things in the appraisal that we need to know. So again, when you do get your copy of your appraisal, because after your lender gets the appraisal in, after they make the decision that they're going to loan on the property for you, and they request an appraisal, the lender would actually go ahead and send you a copy of that appraisal. So a lot of times people just look at it and they just look at the number and say, okay, well, it's worth this. Well, it's good for you to know some of the key things in that appraisal to look out for. And when you know what those things are, it allows the process and it gives you a leg up. So when you're looking at your appraisal, you're looking at the appraisal the way a lender looks at the appraisal, and making sure you're getting yourself a good deal in the home that you're buying. So let's talk about the appraisal, a few things here on the appraisal. The first thing is, how do you read comps on your appraisal? So when you do see an appraisal, again, my course does break down these comps. It does show you an actual appraisal. It does go over every line by line item as to what these things mean. So it's a good opportunity for you to learn a much more in-depth knowledge. If I was to take the time to do this, we will be having a 2-hour call, 2-hour talk today. So again, in order for you to be able to read the comps in the appraisal, you have to know how to read those comps, because when you know how to read the comparables, you know that you're getting yourself a good deal. And let me explain to you how. If you were to be buying a house on the market, and every house in that market has been selling for 200,000, but you're buying that house for 300,000, then you are actually buying a house that is well overvalued, and you're possibly putting yourself in a bad position. I know in today's market, with how crazy things are, and people are overbidding for a house and going in at 50, 60,000 over asking price. That's what a lot of people think they should do. But again, if you look at the comps don't lie, because eventually, if you overpay for a house, that could lead to problems for you in the future. So know knowing how to read the comps allows you to give you that firsthand knowledge and making you understand that, again, you are getting the best deal and best bang for your buck. The second thing is your gross adjustments versus your net adjustments. Now, this is going to be shown on your comparables. And the reason for that is when you're looking at it, there's something that they're going to say, hey, this is based on the fact that this house has a water heater and your house doesn't have a water heater. This is just an example. Most houses have to have a water heater. But if it says that, or it says, for example, this house has a pool, your house doesn't have a pool, we're giving a net adjustment for that. So there's going to be different adjustments that they will use for you to see why some properties are higher than your property and why some properties are potentially lower than what your values are. Again, when I told you about the 200,000 versus 300,000, if the comps show that every house around your neighborhood, you just have the best house on the block, your house is 2,000 square feet bigger than every other house on the block, well, maybe it's worth 300,000 compared to all the other properties that are 200,000, and now you're not overpaying for a property. So knowing how to read the comps is first, and then secondly, understanding the gross adjustments and net adjustments will be the second thing that allows you to gain the required knowledge to be able to understand the collateral section of your mortgage application. The next thing too that I help explain and I go into a little bit in-depth knowledge on is called an appraisal update, or 1004D. The appraisal update is usually needed when you're buying a property. The property might need one or two repairs, you weren't aware of it, and then when the appraiser goes out, he catches the fact that the house has a problem with a leak underneath the house. Well, you never saw the leak when you walked it with your realtor. You never saw any plumbing problems, anything. Everything looked perfect. The house looked in great condition. So all of a sudden, finding this out, now the appraiser is saying, hey, if this plumbing is not fixed, he's not going to be able to clear the appraisal. So now he has to do an update to his appraisal. So at this point, he's going to be using the 1004D, and that's where the appraisal update comes into place. Another thing too could be maybe you requested an appraisal, you're buying a house for 300,000, and it comes back that the house is worth 200,000, and you just can't understand why, because everybody and their mother told you that house is worth 300,000. So now what you can do is you can request for an appraisal update and have him go out there and do another appraisal, and he might come back and say, hey, he missed two comparables that were just sold the last week or last day, so therefore your appraisal of 300,000 is right. So there's multiple reasons why an appraisal update could be used, and in order for you to understand this reason, I help elaborate on this in my course. You can take advantage of that, and you can learn the information needed to help you be a much more savvy buyer, right? Or even a seller. If you're somebody who's planning on selling your property, you also want to know how the person who's buying your property is going to be able to get the money. So again, this helps you be a much more savvy seller as well, and be somebody who understands the real estate market through and through, and gives you so much more upside when it comes to dealing with real estate. Again, my course is in the description link below. Take advantage of it, leverage it, and use it for your own advantage. Next, we'll be talking about is when to determine the need for a subject to appraisal versus an as-is appraisal. So now most times you're buying a property, you are going to be getting an as-is appraisal, meaning that the appraisal is just basically provided as is. There's not going to be anything that is needed. It's not subject to any repairs. It's not subject to anything. But in some cases, you might have an appraisal and the property might need the repairs. So now your property will be subject to the repairs being completed. And sometimes it could be subject to additional documentation. There are 3 things on the appraisal, and in my course, I actually break down those 3 things, and I show you the section where those 3 things are. Because when you get your appraisal from the lender, and now the lender calls you and says, hey, you have to pay an additional $160 or an additional $300 when you just paid $750 for your appraisal, and you're like, what is that for? And the lender is like, well, this is going to be for an appraisal update. Folks, I've seen this happen so many times. As a real estate agent, I've been in positions where people have lost $3,000 in their earnest money, and the only reason was because they didn't have the extra $1,000 sitting around that they had to use to pay for an appraisal and then pay for the appraisal update. The lender will need you to pay for these things before you can close. So it has happened. I've seen these horror stories happen so many times where people say, hey, the lender told me all I needed was $2,000. And now all of a sudden he says, I'm not going to be able to close if I don't come up with $5,000. All of these things are things that you can avoid just by spending a few dollars now to learn the way the lender thinks, so you don't go and you don't put yourself in this position. I wish I can stress this out for you folks, but again, you can only take a horse to the river. You can't force the horse to drink, right? So you guys would make, or you ladies and gentlemen would make the decision on your own if you see value or not. But I'm hoping to bring you guys value and showing you these things so you don't catch yourself with your pants down in the worst place. So again, folks, understanding what the need for a subject to appraisal versus an as-is appraisal is crucial, so you don't find yourself in a position where you have to pay extra money and you didn't know why you had to pay extra money. Last thing will be the market conditions addendum to the appraisal report. This is something you need to see. So for an underwriter, for those of you who are going to go into the mortgage business and you want to get a career in it, crucial for you to know this. And for those of you who are going to either be buying or selling real estate, when you get an appraisal, please run to this section. Understand what the market conditions to the addendum would tell you, because when you understand this, when you look at the appraisal, you understand why the appraisal looks the way it looks. Please pay attention to it. It's the same way you can't say, oh, I didn't know that the crypto market was at or the downward spiral, so I invested my entire life savings in the crypto market right before it started going down. I mean, that's not a good enough excuse. The same way you can't say, I didn't know the owner of the stock company was going to file bankruptcy next month, but yet I decided right before the day before they filed bankruptcy to put all my retirement money into the stock. That's not a good enough excuse. It's the same way you can't say you didn't understand the market conditions to the property of the area you're buying, and yet you went and you purchased the property not knowing that every property in that neighborhood is going to take a nosedive. So folks, you have to know these things. Again, I can't stress the importance of understanding and thinking like the lender would think, because if you can't think like the lender would think, your process becomes so much smoother. If you can't think like the lender thinks, then you go through the stress of trying to figure out why and how you can find the right lender that is going to close your loan. Folks, take advantage of this. Just having great credit is not the answer to being able to fund your property, or having great credit and a little bit of money in the bank is not the answer. I was able to get my first home with no money down and without not having good credit. And it wasn't even an investment property. It was a property I was going to live in. So I had to learn how to think like a lender. I was fortunate that I spent my time employed by a lender, working as an underwriter, and I knew, hey, this is what I would do if somebody was to send me a loan. This is what I would need to see to get the loan approved. So therefore, when I'm going to get my own loan approved, this is what I need to know so I can get my loan approved. I can't stress the importance of this. Not every one of you would have the chance to work for a lender, but every one of you has the chance now to learn from a lender and to go back and apply that knowledge to help yourself to buy your first home or even buy multiple properties. So again, leverage the course. It's on Udemy. The course link description is in the description link below. Click on it, check it out, and let me know what you think. Once again, don't forget to leave a like. Don't forget to subscribe to my channel. Hit the notification bell for more content. And most importantly, leave me a comment. Let me know again if this is helping you out, if this is giving you knowledge, this is giving you value. And if it is, I want to keep making more of things like this for you. And if it's not, let me know so I can stop bombarding you and giving you information that you don't deem valuable. Again, thank you so much for your time. I appreciate you. Peace.